Hey, welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a great day here so far. This is a quick show that we do. It's called The Closing Beat. We just cover the stock market for the day, the good, the bad, and the ugly. We had some ugly to cover yesterday, but we'll go over what happened today. And as always, try to just share something new with you. A pretty interesting story yesterday about how the markets fell and specifically what was going on with that. So if you're interested, maybe you'll check that out. We also do videos at 1 o'clock each day that are more informational in nature. Try to get real quick, just give you some tips and tricks and things that have to do with retirement, personal finances, or just general things that we come across here with customers at Jazz Wealth where they get stuck. We're also playing a game. We'll probably just keep this going through the rest of the summertime here. It's called Guess the Dow. Bottom right-hand corner of your screen, you can take your guess. Where do you think the Dow is going to close next week, right? It's simple. Answer a few questions. Who are you? Where do you want us to send the money if you win? And what's your guess there? No spam, no strings attached or anything. Whoa, that's not going to work. We'll just, hey, if you win, we'll send you $100. It's a free gift card, no strings attached. Like I said, if you're one of our customers, we'll put the $100 in your account too, if you prefer that, or, you know, you could take the gift card if you prefer that as well. Either way works for us here. This week, Thursday, for our customers, we got a class coming up. It's called, we're going to focus on Nest Egg, actually. So it's a financial planning software that we use. We just give it to every one of our customers so that they can build their own financial plans, and I can help along the way if they like. But we're going to go over sort of setting all of that up from the, and there it goes. It was meant to be. We're going to go through the goals profile there, show you how you can set sort of basic information up if you don't want to go really crazy and, go all in with this. I should always remind people, it's not our software. It's actually called Right Capital, and it's the financial planning software that all the great financial planners use. We just thought, hey, let's just give it a funny name and give it to customers, and if they want to use it, then that's great. All right, anyways, let's talk about the markets here today, because you probably don't care to hear too much about all that. We got the Dow higher by 311 points. Wasn't yesterday pretty scary? Did we recover about half, not quite half on the Dow? S&P added 37 for the day, and the NASDAQ added 107 points. So the market's given us a little bit of a recovery rally after 6 straight days down, right? This is the first positive day now in 7 days, and it was a wild night last night. Now, our class that we did last week for customers, we actually highlighted where you see growth after hours, right? While most people are chasing the markets throughout the day, the real action happens after hours historically with the S&P 500. And boy, that was the case last night, right? So the markets opened up after hours and just sold off like another 2%. It was just a crazy drop initially. Then the Asian markets opened up overnight. Well, they had to digest the idea that, we labeled China as a currency manipulator, so our markets fell even more thinking, holy cow, this trade war thing is getting out of control. China's just going to go crazy. And so there was a lot of speculation. Asian markets open up, and China says, hey, you know what? We actually are not manipulating our currency, and we're going to set to prove it to you guys so that everybody feels good about this. We're going to set our target rate relative to the dollar just above 7, so 7x. And that was sort of a way for them to show, look, you label us what you want, but we're not going to do this, and sort of help shore up their currency overnight. And right when they did that, our stock market started rallying, recovered the entire 2% drop. Imagine that, right? Yesterday, the S&P fell like 3%. It took all day for that to happen. Overnight, we fell 2%, and by the time Asian markets opened, we recovered all of it, almost like that, man. It was just so cool to watch. I mean, I was up all night, just sort of staring at that. Anyways, that's what I do. So anyways, that helped the markets overnight. We started with a gap higher here today, and basically we held in there. I mean, there was some selling pressure in there. We finished near the highs of the day, so that was a good sign overall. But, generally speaking, good recovery, right? Now, there's something called a time and price correction. I'm going to see. Oh, I hope this works. I'm doing things a little differently today. Oh, okay, good. So this is the S&P 500. You got this recovery here that takes pretty much all of yesterday's intraday activity out, meaning we recovered all of that. And what we've seen over the last few days here, that's a price correction. And we've talked about this in the past, and a great example why I'm using this here today is this guy over here. If you ever watch the closing beat anywhere from October to go into that December time period there, we talked about this being a time correction, meaning price really wasn't achieving anything, and the markets were sort of working off some of this sell-off here. Not a good thing that the buyers couldn't step up, and so that eventually led to a decline. We've got something over here, this most recent drop. This is a price correction, meaning just the markets fell out of bed, right? Instead of sort of working off any overbought scenario, they decided to pull back. And so you'll hear that in the news maybe a little bit more as the days go on here. Price correction, time correction. Now, in the grand scheme of things, if you were to zoom out and look at the S&P 500 as a whole, we are currently in what's I consider a time correction, meaning we're not achieving anything. Can I actually zoom out? It's been a while since I've used this here. Let me go back out here and zoom out. Look at the weekly chart here. If you go back to 2017 when we hit these highs, what has the market really done? Anything? I mean, basically, we're in a wide and sloppy sideways range here. And so a lot of people feel like, hey, we've had an amazing 9-year rally, going on 10-year rally. The market's sitting at highs, wiggling back and forth, really just has people saying, oh, recession's coming, get out, and then they're wrong. And then, oh, the market top is in, and then they're wrong. When really all we're doing is burning off steam up at these highs. We ran up a severe, strong hill for the last 8-9 years now, and now the markets are sort of settling in at those highs. So when people say to me all the time, Dustin, do you think I should invest now because the markets are going to pull back? I go, how do you know they're going to pull back? There's a good chance that they just continue to whip around inside what's arguably, a very wide range. I'm not discounting that in any respect. But people look at that and they go, okay, well, we're essentially just floating around at highs, burning off that energy. I don't know. I just wanted to share that with you guys there real quick. So price and time correction. Currently in the short term, obviously a severe price correction there. And, you got to take what you get there. All right, so let's move around here. Looking at the Dow. So if you go through the Dow, I'll pull up the ETF here. You got the Dow right around the 200-day moving average, a little bit of support there. The names that got hit yesterday got supported today, sort of just like a child, right? We're scared one day, we're happy the next day, but that was the markets today. Nike gained about 3%, and that was one that got pretty beaten up yesterday, very much oversold in the short term, so kind of a bounce expected there. The strength got good support today. McDonald's, known as one of the strongest stocks in the Dow in terms of relative strength. And so you got a good recovery there today, almost 2% as far as that rally. That one's really holding up the best. And the easiest way to do this is if you want to see what the strongest stock in the Dow is. If you ever just want to experiment or click around a little bit, first what you do is you pull out the DIA. That's the easiest way for most people to take a look at the performance of the Dow. You can use the futures if you want, but the DIA is the easiest way to do it. This is an ETF, an index ETF for the Dow. You look at this and you go, did you see what I did? I was pointing at the screen like you guys were here. So anyways, you see this most recent sell-off here. The index fell apart because of everything falling apart, right? It can't be that every stock is still strong and pulled back a little bit, but yet the index fell. So what you could do is you could go, okay, DIA, let's pick a stock in the Dow. Nike. Oh, wow, Nike sold off there. So Nike is known to be participating with the overall market and, in fact, a little bit weaker than the market. But you can compare the last week and a half or so to the DIA and just look at a chart and you go, okay, that's basically the same, maybe a little weaker. Then you can pull up something like McDonald's and go, oh, that doesn't look anything like the index, right? So you very quickly could see that's relative strength. 3M, you could look at that and say, oh, wow, that's a lot weaker. Not only is it not participating here in the short term, it's weak overall. It looks nothing like the Dow in general. And so you can kind of work through some of these things and just sort of see what's weak relative to the overall market and what's holding up. And so a lot of investors went back to that McDonald's today because it's a relative strength play, right? You can't get in trouble as a fund manager for buying McDonald's, at least at this point. Think about that, right? What happens with these guys that are managing accounts and making their adjustments there? If they have to report to their boss that they bought 3M, their boss is going to go, why? You bought a weak stock, you put money to sleep essentially. But if they have to go say, I bought some McDonald's today, everybody's been a little bit scared lately, I bought some McDonald's. If they have to say that, their boss goes, great, you bought strength, you got a good quality stock there that's doing all right, seems to be moving up and everything is good there. So that's that one. I'll also maybe point out while we're focused on here in this Dow area, you got Disney. So Disney reporting earnings after hours. I believe it's a little bit lower. Can I go over here and see this sucker? Around 138, so you lost about the 2% mark on Disney. So Disney missed on earnings, missed on revenue. But if you look at the historical results for what happens to Disney, this August earnings report is known for being the weakest out of the entire year. Remember we talked about Netflix last earnings being the weakest? Disney is known for being the weakest there. The average decline is actually 2.7% when they report their earnings for the next day. And it's only positive, meaning it'll only be positive tomorrow, 20% of the time. It's 22% if you want to get exact. So a lot of people had lower expectations set up into this. They missed overall, but I think they did pretty good. They got a lot of things going as far as their streaming, as far as the new Star Wars parks and stuff like that. So they've got a lot on their plates, and in my opinion, handling it pretty well. The stock is pulling back around 138, which is not so bad if you own the stock or you're looking to buy the stock. You know, that's not really that bad. It is, by the way, the fourth best performer in the Dow here this year, so far year to date. So maybe something to look at there if you like the idea of Disney falling for a little bit. All right, let's look over at the NASDAQ here. And the NASDAQ Take-Two Interactive gets all the excitement today. Well, most of the excitement. These guys make video games like Red Dead Redemption, Grand Theft Auto, Red Dead 2, I don't play them, I'm sorry. But stock did well, 8% on the day. Reported earnings, revenue much better than expected. Digital revenue, you know how every stock has something that you focus on here. Netflix subscriber counts and Twitter, daily active users and all these things. Digital revenue is important for the gaming stocks. So digital revenue for these guys was up 35%. Overall, digital revenue makes up 79% of this company's total earnings. So if you had to own Take-Two Interactive or you had to own EA Sports or something, you want to see that segment of their business growing like hotcakes, right? You want to just see wildfire in terms of growth there. And Take-Two was able to provide that. So the stock was higher today, certainly one of the better performers in the NASDAQ overall. Oh, and then if you look at EA Sports, they got a little sympathy out of that. It was about almost 2% on that one, but still relatively weak. So that's what Take-Two Interactive was as far as the performance in the NASDAQ. S&P 500, like I said, is the first gain in the last 7 days, right? We've been down every day for the last 6 days. We finally got a little bit of a bounce. The market sold off so much that things like Salesforce, Zion, and PayPal, those three stocks have sold off so much that, in fact, they have never been negative 1 week from now, given what's happened with this stock there. I don't like to go too crazy with that, but you get what I'm saying there. We've done a few of these. So really interesting. Already, some of them started a little bit of a bounce here today, but that's just an interesting stat to take with you. People running for safety still. That's the general theme of the market. Even though the market's bounced today, you got gold a little bit higher on the day. Nobody was really interested in selling their gold. You got utilities, got a 1.25% gain on the day. That's known as sort of a safety play. Whatever, safety play-ish. You got REITs. There we go, loading up there. So you got REITs a little bit higher on the day, and you have that general feel of people that just, let's go move a little money to safety. And so that's what you see in the markets. You could see the REITs in general holding up pretty good for the most part there. Now, compare that to some of your more aggressive areas. You got semiconductors. Yeah, it was a little bounce today, but sort of beaten up in the long run there. We talked about this sort of uptrend line you can see on the charts there. Obviously a much different story. Retail is a completely different story. It had a good day today. It was up a little bit on the day, not too bad, but in general, very much a weaker area of the market, money moving out of there. And consumer discretionary stocks just here in the short term really participating on the downside, and that's to be expected, right? That's a really, well, it's an aggressive way to invest if you feel like the markets and economy are starting to get a little bit weaker. And so that's that one there. If we look at XOP, that's new lows. We pointed this out yesterday as new lows, and I thought, well, I don't recognize or remember in my head any low around $22. So did a little research last night, and then it obviously finishes 1.5% lower today. This is the lowest that it's been in over 12 years. Over 12 years. That's as far as I went back before I was like, all right, forget it. Let's move on. So really weak here. Now the takeaway, if you're looking at XOP and you're like, oh, okay, oil, gas, explorers were weak today. In fact, most of the names that made new lows today were oil and gas related. You go, well, maybe it's just one or two stocks that are really weak. That's not the case. The XOP, by the way, if you use this ETF, it's what's known as a, if you're using this ETF in general, it's known as a modified equal weight ETF. I think that's how you say it. So it's essentially an equal weight ETF with a slight modification to try to improve on performance to match better the oil and gas index. So what that tells you is if you look up Google search like XOP holdings, right? And then you just look at every stock that's inside of the XOP, you're going to find that there's about 2% or so of holdings of every single stock, which means it can't possibly be like the communication services, where in communication services, the XLC, most of it is Alphabet and Facebook, right? It's like 40% of the entire ETF is made up of those two stocks. So if those two stocks have a bad day, you can pretty much figure the sector as a whole is going to have a bad day. You can't say the same about XOP because we'll just say it's an equally weighted ETF, although in reality it's a slight adjustment there. So you'll see it's like 2.8% in one stock, 2.6 in another. Slight modifications there to really dial it into the index there. So really, new lows, not because of one individual stock, just weakness overall. And I'm sorry, I'm doing this a little different today, so I'm going to slide over here. We look at the price of oil. So oil lost over 2% today and down a little bit more. So about 2.25% at the moment. Remember, we said this is all technical in nature, and I'll just draw this one more time. You've got this series of highs, which really connects to the other one that's further back to the left, but this is easier to draw in case I decide to zoom out. So in general, you've got this going on here. A very technical area, meaning people will not be interested in this until you break over that trend line. I've been pointing this out every day here, and this is actually the crude oil futures, so it's a direct sort of view of the price of oil versus using an ETF or something. You could use the USO if that's something you're interested in there as well. Now, here's the fear. The fear is, holy cow, trade war getting crazy. China may not buy any of our oil, right? They talk about not buying agriculture. They're talking about doing all kinds of other things. They may not buy our oil. If they can't buy our oil, or they decide not to, or threaten us with that, where would they buy their oil from? Well, they're not technically allowed to buy it from Iran because of sanctions over there that we placed on them, but who's going to stop them from going to Iran and saying, hey, we'll take your oil, and using that as sort of a slap in the face? I don't know that that's going to happen, but because that is a possibility and there is fear in general or uncertainty about what they will do, oil just keeps sliding lower, taking all those oil service stocks with it. All right, you got XLK. This is your tech area of the market here, trading right off the trend line there. We talked about this yesterday. It's not really convincing what happened today, if you ask me. You wouldn't expect it to just sort of fully recover, but that bounce didn't really feel like much. Looked at it a few times throughout the day. I'm like, I'm not feeling it. I just don't see that excitement in there. And then, of course, if you're in the energy space, you got XLE. It's the most oversold sector, by the way, the energy sector, if I haven't said that already. So that one looking a little weak. And then emerging markets. There's your waterfall drop we talked about yesterday, sort of extremely oversold in the short term, getting a little bit of a bounce here today. That's from your bottom pickers, people that are trying to see what's going on there. All right, in the news here, you got Shake Shack. There you go. Great day for Shake Shack, 18.25% on the day. Earnings beat, revenue beat. Revenue was actually higher by 31%, if you care. And they have a partnership with Grubhub, so a lot of excitement going on there with Shake Shack. People pretty excited about that one. Marriott actually couldn't finish the day in the positive there. Basically, earnings were as expected. Revenue missed. This is the 6th straight quarter, by the way, that I don't know what I'm looking at. This is the 6th straight quarter that they've lost on earnings. Not good for them overall. Now, the metric here that people use actually is revenue per available room. So if you ever want to track these guys and say, well, how do we know if things are getting better? What's everybody going to look at? Revenue per available room is how we say it, not active room. That's crazy. Revenue per active room was up 1.2%, but it was just because they raised prices a little bit. Overall occupancy was a little bit lower, and that's why people were a little bit frustrated with that one. We won't cover that too much because how exciting are hotel stocks? Speaking of exciting, Beyond Meat's almost perfectly back to 160. You may remember that Beyond Meats is doing a secondary offering at 160. They announced it when the stock price was at around 185. That sucks for the people that have invested at that price. We went over that on that day. But the other sort of news pushing this stock lower today is because of Tyson. Remember they reported earnings yesterday, and they announced, hey, we have meatless nuggets. We've got meatless products. We were going to slowly roll them out. Tell you what, we're going to go out to 4,000 stores. We're just going to announce these things and take out and compete with Beyond Meats. And so because of that, Beyond Meats, you notice this day by day, they're slowly getting the attention pulled away from them. Impossible Burger was earlier last week. You got Tyson now coming in here. And so not so good there. All right, moving on real quick, and then I'll take your questions if you have any. You got 5 new 52-week highs today. You had 2 of them were REITs, extra storage space, or extra space storage, I guess. Is that the name of it? Extra space. I always say extra storage space. Added 1%, hit new 52-week highs today. And then you have public storage, which just poked above there a little bit. Two really strong REITs, by the way, that did all right there. And then you had CME Group. If you like to follow those guys, they're doing really well. So I'm just as a company, obviously the stock's doing well, but I just thought that was interesting. In the new lows area, most of it was oil and gas. Basically, just pick one. Pick an oil and gas stock. Apache, I just thought off the top of my head. Halliburton, just thinking about it off the top of my head. Cabot Oil, top of my head, severely oversold there in the short term. A lot of those names in the new lows, I won't spend time making you sad about those if you own them. You got Carnival Cruise Lines also hitting, this is Carnival Corporation, but hitting new 52-week lows there as well. Poked down there and was able to kind of hang in there, not too crazy. We mentioned no, I didn't mention this one. International Flavors and Fragrances was the worst performing stock in the S&P 500 today. Earnings related there, not really good. It was the big miss there. 16% new lows at the same exact time. New 52-week lows at the same time. And then Mosaic. I know a lot of people are passionate about this stock here. Negatively passionate. I don't know how to say it. Almost 7% down on the day. This was your second biggest loser thanks to earnings for them as well. Okay. I think I did it. Those are everything that I have for you in terms of things to cover today. Yeah. That's pretty much what we got there. All right, if you have any questions, I'll be happy to answer them. Otherwise, we'll wrap it up and move on for the day. Where am I looking? Over here? Venezuela, yeah, new sanctions on their government as well over there. I think it's in the scroller below. Burger King coming out with a meatless Whopper. It's actually Impossible Burgers meat. So it's not Burger King, it's Impossible Meats. They're actually choosing them to do their, their what do they call it? Impossible Whopper? Something like that? Yeah. What would cause the market to reach 30,000? It would mean that it went higher, right? That's a smart ass answer, right? Crazy how futures negative 500 on the Dow, we ended up 300. Yeah, it was crazy how the after hours markets moved as well. We were negative yesterday, then when the markets closed, we went even further lower, breaking through there. That was pretty interesting. I have a lot of fun when the markets are exciting after hours. It's fun to watch. Like, why do we stop? You're in your early 30s. The question is, mention the time in the market versus timing the market. With that said, what percentage of your portfolio do you keep as cash to capitalize on drops? I've covered this one before. So my idea of having your cake and eating it too, because we all like to try to time the market a little bit, don't we? I mean, at the end of the day, I could put the suit and tie on and be like, it's the time that you spend in the market and, just doing that gets you wealthy. No. At the end of the day, you see the markets falling. You guys are all here and you see when the markets fall. So what I tell people is, look, you have a number that gets you to your goal. Every one of our customers, we do that. Let's say you need to invest $6,722 to reach whatever goal you have in the future. So I work it up for everybody. You may choose to spread that over weekly deposits, monthly deposits, whatever it may be, to make it easy. So you set up your recurring payments or deposits. When you see the markets fall, what's wrong with going in there and saying, I was putting in, $85 a week, I'm going to make it $112 while the markets are down, and just let it simmer for a little bit. And then when the markets come back and they have these, slow and steady uptrends, you bring it back down to the 88 or 85 or whatever your normal number was. It's technically going to make you over at the end, but that's okay. We'll fix it, right? Or you could just scale back later at some point. So I like the idea of adjusting those deposits to just have more dollars going to work lower. It's kind of like you're timing the market, but it's not really, right? So it's like a nice mix there. And I think it allows for a much more entertaining engagement in your investments there, right? I have so many customers. I get an alert every time someone changes something. I don't necessarily look at them, but we get an alert when someone went from $50 to $55 or something like that, because sometimes we want to celebrate the little changes. And I get a kick out of when the markets fall and everybody raises it a little bit. It's like poof, your email or support box just fills up with all the people making changes. But that's awesome. That means you guys see it as a discount. Like I said yesterday, I only had one customer, a new customer, that was a little concerned that he started investing and the markets fell. He didn't understand how it all works, so we helped him out. Other than that, everybody gets so freaking excited when the markets fall. I love it. I mean, I do too, So that's the short, hopefully, I don't know if that's like an answer to your question. It was a short one there. If I missed your questions, I'm sorry there. I'll try to catch up. Your company started off in a 401k without any match. Can you contribute 100% of your salary towards a traditional IRA? There is no cap. I want to maximize the 19,000. Yeah, you could put the 19,000 in. Even if they don't match, you could still participate. You could put the 19,000 in, assuming you're under the age of 50. Maybe in the future they offer a match, so it's not like it's a bad thing. If you have the opportunity, take a look at the investments inside there and see if there's some really good choices. Some 401ks, not all of them, they don't have the greatest of choices. And so in that case, you want to weigh like, oh, do I really want to do it through here, or should I try something different? But the short answer is, yeah, you absolutely can. It doesn't matter if there's no match. Why do you have two different times? There's actually 4 different times. You can't see the other 2 times in the background. The clocks are set to 5 o'clock, 2 o'clock, 9 o'clock, and 9 o'clock. And nobody knows why. Nobody can guess. Someone's going to guess it. But yeah, so Eminem's got the right idea. You're always in the market, but you're always looking for opportunities to add dollars at lower prices if you can. I don't think there's anything wrong with that. You know, I know some people pick on me in the comment sections for, timing the market, but so what, right? It's your money. If you want to buy cheaper, you buy cheaper. Don't care what anybody else says. All right, that's all I have for you. I'm going to wrap it up here for today. I appreciate you guys watching, joining us here. Hope you had a good day. We'll be back tomorrow. We're talking about the FIRE movement tomorrow in our 1 o'clock show. So I hope you'll check that out on our channel, YouTube, Jazz Wealth Managers on YouTube. And have a great rest of your evening. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.